Well, thanks very much, gentlemen. I mean, really, just to kick it off, Woon, you're the head of equity for Asia for LendLease. Why would an investor look beyond the traditional markets?
I guess it will probably boil down to diversification of risk. I think Southeast Asia as a region, it does offer a diverse mix of strategic options. You have the stable income producing assets, or you could participate in value-add repositioning opportunities where you have strategically located properties that are underperforming. There are also development opportunities, as well as potentially private equity recapitalizing platforms.
And gentlemen, would you see that as the main driver, diversification as being the main driver for investing in these locations? Susha?
Yeah, I do think that, for example, like David and us, couldn't be more differences in the sense that David is the Vietnam focuses, whereas for us, we are Pan-Asian. So the way we look at the risk is that we look at diversification, negative correlation, because not always the whole entire Asia moving in tandem. So you could be a situation whereby Japan is in distress, and yet Hong Kong and Singapore doing very well, or South Asia doing extremely well, and then the North Asia not doing well. So, but far we concerned, we look at opportunity on the Pan-Asian basis. So South Asia offer fantastic diversification for us.
So I'll move back to you, Woon. You know, you have a regional role based in Singapore. What trends are you seeing in terms of particular sectors or particular countries in Southeast Asia, which the international investors, when speaking to you, are raising?
Well, for us, our strategy is one that's retail-led. So we target specifically slightly more sophisticated, more institutional type investors. We like retail because it's defensive in nature. It is a skill set that LendLease has been doing for years. It's very hands-on, and it's a sector where we see, you know, without being overly presumptuous, it's a space where we have a competitive advantage over the other industry players, and there seems to be a fairly high demand from investors for that sector.
I'd imagine
we managed to persuade them to invest in Malaysia. So they've got
we've actually done a deal.
We had a large investment first investment in LendLease in Kuala Lumpur. So that's very successful.
But, you know, KL is unrecognizable from 15 years ago.
Absolutely.
And there's so much of it is commercial retail space. Is that the primary focus of the overseas investors coming in?
Yes. The investor market will find that right now Kuala Lumpur is a very shallow market. We don't have trading assets available off the plan. I mean, you couldn't go in and buy a building tomorrow because they're all owned by large institutions. That's changing because the government has released some brownfield sites and some city center sites which are owned by the government back to the private sector, following the URM model in Singapore, trying to resuscitate the city center as a trading investment platform. Malaysia has one advantage in that our currency is very stable, our economy is very stable, and I think if you're on an upside, we've done very well on 9% this year against the US dollar, and we'll be improving even further. The only country that's beaten us so far, surprisingly, is Thailand. Thailand has done 10% to our 9%. But nevertheless, Malaysia's platform for improvement is very strong. Stable government, stable politics, stable policies. I think we're on the verge of a cusp, and we're very lucky. They came in at the beginning, and the prices were still a little low. So LendLease will make a lot of money if they choose to exit at the end of 3 years.
Thanks, Kumar. Susha, just come back to you. Inflation and currency risk. What's your perspective on the true risk for an investor relating to these in the markets you're looking at?
What I would say from the exchange rate perspective point of view right now, the Southeast Asia, with the exception of really Vietnam, have been extremely stable and on an upward trend. And the reason is very, very simple. You look at current account deficit. After the Asian crisis in 1997, situation for the last 10 years has reversed so much that the whole entire South Asia today is actually the creditor to the world. And because of that, it's taken away an ability for anyone to yank the capital out and therefore cause the currency to blow out of proportion. That risk has disappeared pretty much today. The economic structure is totally different today than 10 years ago. So I think it's important for people, when we look at the South Asia, not to forget the fundamental economic. It is very solid today.
In the markets you're working in, is it essential to have a local partner?
Well, okay, for us, yes, because it does de-risk part of that investment process, number one. Number two, we also see it from a collaboration perspective, which is one of our core values as a company. And I think the importance of local partners, the skills that they bring along, the local in-depth knowledge that they have of their own domestic market, the relationships they have with government bodies and planning regulations and authorities. That's something that a foreigner like ourselves cannot replicate. Yeah.
Yeah, Kumar, your advice in Malaysia?
Yeah, I think it's important that, as Woon pointed out, that local knowledge is primarily very comfortable, very kind of comforting to the foreign investor. And usually they would go for the brand names that are already local brand names. Some of them are maybe government-linked companies, some of them private sector companies, but those already have established reputations in the area of expertise that they have. And when you do that, the second question is, in Malaysia, having more than 51% is not an issue, because the local partner primarily is your facilitator of all the skills necessary to make the project a success. But it is very important in our view, wherever we go, Malaysian companies going to Vietnam and going to China, all have local partners, even in India. So without that, it's very difficult to enter a market.
Are there divestment rules in Malaysia?
No.
In the past there were, right? But those have now gone.
They've gone. There are no divestment rules at all.
So you could have a controlling interest
yes,
as an overseas investor.
As an overseas investor.
Yes. And in Vietnam, David? Would you always recommend having a partner and the regulations relating to that?
Well, it's possible to have a local partner or not under the laws of Vietnam. So we are a foreign group. We do have 100% foreign-owned investments. But then we are a Vietnamese-based company and we effectively are local. So we're a little bit different. But my advice to anyone looking at investing into Vietnam is you must get someone who is located in Vietnam who you can trust and rely on to work with you and make sure you're aligned on your objectives. So that's essential. And we say that to everyone that comes to Vietnam. On the ownership, we would always want to take a majority and control the development.
Susan?
I had a very strong view about partner in Asia. And my answer to you said no, because it depends on what type of capital you are. If you are what we call in our industry, we term allocator, people that had money in the fund structure, but doesn't have the ability to execute anything at all, then you don't have a choice. You must have a local partner. The only time, if you look back, we've seen funds that lose money, lost their capital, it's all because the partner took away from them. Okay? We do 100% everything if we can. We may consider to do a partner, but it had to be with people that understand when things don't go well, how you react to each other, the partnership. And if you don't have that level of comfort, I would strongly recommend you not to do it. Doesn't matter even how good is the deal.
Vietnam as a launch pad for investing in other Southeast Asian countries. Thinking aloud, you've got Cambodia, Laos. What's your views on those markets?
Cambodia, we like. We've been watching Cambodia very closely for 2 years. It's a much smaller market, of course, than somewhere like Vietnam. Agriculturally, it will be a very rich country, and from a private equity point of view, We think it's got a lot of legs. In fact, we recently invested in a very large sugarcane ethanol plant in Cambodia. And we will probably do our first real estate investment in Phnom Penh this year or early next year, a small boutique type residential project, just to sort of try it out and see how it goes. One of the points, just to finish the question, I suppose, Laos, on the other hand, there's not much happening in Laos. If you want to do hydroelectricity or maybe timber or some sort of minerals, there might be some opportunities, but from a real estate point of view, it's too small and too early. Indonesia, which we don't have a mandate to do in our existing funds, we've had a few internal discussions about that because Indonesia has come up in a lot of discussions lately on investment, Southeast Asian opportunities. But from our point of view, we've decided to remain focused on 3 countries, Vietnam primarily, Laos, Cambodia, and stick with that and become a specialist in that area. I think as you expand out, take in Philippines and Indonesia and Malaysia and whatnot, your depth of expertise reduces, and I think then therefore you expose yourself to more risks. So we will, as a company, continue to focus primarily on Vietnam and I think Laos and Cambodia, going forward.
Yeah. Thanks, Dave. Just to wrap up, if I could just raise a double-barreled question for each of us to answer. The first one is about exit. Exit from investments in the form of either REIT market or other means of exit. And the second one, in the markets you operate in, the outbound capital and the outbound story. Woon Ping, you'd like to go first?
Our investor capital pool are traditionally long-term players, so the platforms that we actually currently have are all open-ended, but we have review points during the cycle where our existing investors can redeem their shares and exit. All our structures are pretty much open-ended, with the exception of a couple of closed-ended funds. Yeah.
And Southeast Asia capital going outside?
For us, it's actually all our capital. It's actually most of our capital is actually more foreign, investing into Southeast Asia.
The Asian capital has finally come of age. Previously, we had the traditional investments opportunities were in Europe, in US for Asian capital. But today they find that there are more opportunities within Asia. Foreign exit capital in Malaysia was almost 11 billion ringgit last year of funds leaving Malaysia to invest in India, Vietnam and China. Pretty large investments across the board. And in Singapore as well. So it's a two-way street, Asian-centric. Korea is just beginning to discover Asia again. So I think we're going to have lots of funds flows within the region.
It's the Pan-Asian capital flows, isn't it?
Yeah.
David?
I think I sort of agree with what you just said. I think a lot of the Asian money is staying in Asia. And it's probably coming out of Japan, your more established markets, Japan, Korea, Taiwan, into less established markets of Asia. Singapore is also doing a lot of that at the moment. And I think that trend will continue. From a structure point of view, a lot more interest in direct investment or direct co-investment into specific projects. And also more focus now on the LPGP structured private equity type funds for real estate, or even it's what they call a club fund, which might be 2, 3 or 4 strategic LPs that will chip in 50 million each and form their own little club type fund.
Thanks, Dave.
I think for me, the wave of Asian capital, I agree with Kumar that I think going to be deepening between that. We've seen the Singaporean go invest in Thailand, and we see Singaporean going to Vietnam. Singaporean traditionally have been quite big in Malaysia. And then we also see Indonesian going to different places, Indonesia going to Vietnam and all that. So this is going to continue. And this is the significant trend. It will continue and you should expect